With the major hits to the stock market, the crypto market, what do the Trump tariffs mean for real estate? Now, I got to tell you, as a high production real estate agent here in the Las Vegas Valley, I have heard everybody from I want to buy now to no, everything's uncertain and I want to pause. Well, I want to give you a little bit of insight as to how some of these impact. I'm going to say take a deep breath, because when it comes to real estate, everything works out in time, meaning we have not seen any long period of time, say 10 years or longer, where even an economic impact didn't bring real estate back. Now, when it comes to current real estate, if we're looking at something like, oh, is there going to be a crash? Is this really going to hurt it economically? Well, in all actuality, chances are it's actually going to bring the prices up. Why is that? Well, the tariffs on goods. If those goods are going to cost more, how can you build a home for the same amount of money or less? So while we might see a potential for a recession, I mean, people are even talking depression, and politics aside, regardless of what side of the aisle you are on and what you believe in, if you believe this is good for long term, or if you believe this is bad and we're alienating people and and putting extra cost, and inflation is going to go up and it's going to drive interest rates and throw so many things off. If a home costs more to build, they have to sell it for more, and the resale market tracks with and trails the new home market. Now, you could say, but what if the real estate market on the resale side really took a spiral down and a bunch of people lost their homes because they lost their jobs and so on and so forth? Well, that one doesn't really hold much water either, because so many people have so much equity in their homes. As a matter of fact, the amount of debt on all homes across the United States is sitting at about 46%. We have one of the lowest foreclosure rates that we've seen in decades, and the delinquency rate is extremely low as well. So we don't really anticipate that, because what we would see is that more people will just put their homes on the market. They will sell them strategically. Maybe they'll be priced a tiny bit under what they're priced at this exact moment, just to get it to move if more homes flooded the market. However, again, it's still going to track with what would it cost to replace that home. So ultimately, we're actually expecting an increase of about $9,000 on average per home just for the goods cost. That's not talking about profit. That's not talking about inflation. That's not talking about trend. That's straight up for the goods cost on the average home. So we really are seeing a potential impact that's going to drive things up. The other thing that's really, really important in this is the way the markets reacted. We actually saw the treasury bills change in a positive way to where rates have actually dropped down. So our rates went from in the high sixes to in the mid sixes today. And that again is the par rate. So if you're talking about FHA and VA, you could even get into the fives with some of those products. So with that, there was a lot of people on the sidelines waiting to have their purchasing power grow as a result of rates going down. So if the rates are going down and you could buy a house at today's level before the houses really start to increase in price, it might be that perfect storm of doing that. Now, again, it's all based on your personal considerations. What are your needs? What are your wants? What are you looking to do for your family, for your legacy, for your wealth growth? All of those types of things have to factor in, and that's where you might want to talk to a professional, both in finance as well as real estate, to see exactly what this means for you. I believe that the market is still going to stay very stable, increasing incrementally. However, I also do believe that as rates go down, we will see a lot more buyers come off the sideline, because political uncertainty and everything else that goes on still doesn't change our lives directly, and the need to provide shelter for ourselves, for our family, for our loved ones, and make the moves and the decisions that we need to make. And again, even people that bought right at the peak of the crash, that were buying their primary residence and bought at a payment that they could afford and withstand for the long term, and they held on to their houses, well, they're doing really well with them now. So again, if you're not looking at a short-term window, if you're not looking at a payment that you can't afford and hoping that the rates go down and you could withstand that payment, let's say for a year or maybe 2 years, but if you don't get it lower in that period of time, then you're really going to be strung out to, then you're really going to be hung out to dry, then you should put pause on. However, if you're buying a home at a mortgage payment that you could afford, and you're planning on staying in it for a while, then again, real estate, it's a tangible good. It's oftentimes a safe harbor. And, ultimately, again, looking at historical data, it's worked out pretty much every single time, unless people bought at a time and then sold at a wrong time. So that's my take on the tariffs and what's going on. If you'd like some more information, please DM me, give me a call. I'm happy to discuss this with you at any capacity in regards to exactly how it affects you as opposed to the market in general. Thanks so much.